Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 28th of January, 2022, and we had a positive week for the Nasdaq and the S&P. That should be colored red. The Nasdaq was down close to 1%. Semiconductors got hit, but all in all, it seems like we got a little bit of stabilization this week. Let's look at the daily chart of the S&P 500. As I've mentioned numerous times, we came down to the volume-weighted average price that began at January of 2021. And for whatever reason, buyers defended that level. We're still below the 200-day moving average, and up here you can see we have a declining blue 20-day and green 50-day moving average, as well as the year-to-date volume-weighted average price, which is still negative, and this prior band of support, which has the potential to become resistance. So we're not out of the woods yet, but we started to experience a little bit of a bounce. We started with a gap lower this week, and then rallied right up to that declining 5-day moving average. That's where we were Wednesday, when the Federal Reserve had announced their decision on monetary policy. And you can see here later in the day today, we got back above that volume weighted average price. I had suggested on Twitter that I was getting long in here with a stop just underneath that level. It did get stopped out, but fortunately for me, I got back involved in a small position though. We're still in a downtrend, but it looks like we're starting to stabilize. First thing Monday morning, we're going to have the 5-day moving average advancing because we'll be averaging this data from this Monday into the calculation, and that means first tick Monday morning, unless we're below this level, the 5-day moving average will be advancing. Now we got a little bit extended here late in the day, and we're approaching the volume weighted average price off of that January 12th failed gap up, which was right here. So we're still again in a downtrend. You can't be too aggressive on the long side. Like I said, I got back involved, but I certainly didn't hold the full position that I got involved in, because we saw a rally from 432 to 442, and what more do you expect from a rally? So maybe we do something like this, continue up a little bit on Monday, and then perhaps pull back, wait for that 5-day moving average to kind of catch up to it, and then do some more constructive work to see if we can see a bigger turnaround. But again, we've got that prior band of support up there near 450, and we're below a declining 50-day moving average. Odds just don't favor a quick turnaround here, so you've got to just continue to treat it cautiously, and remember that these bounces in this downtrend are just that until proven otherwise. They're bounces in a downtrend. The downtrend is defined by the declining 20 and 50-day moving average. For the Nasdaq, it's worse here, obviously, because we're still stuck below that volume weighted average price from the beginning of 2021, and we're clearly below a lot more important levels here as well. That 20-day moving average way up at 372, and the 50-day way up at 385, 386. So in this market, it kind of looks the same on an intraday basis, meaning that here's the volume weighted average price from the Federal Reserve meeting. We got above and held above that. We're above the 5-day moving average. The 5-day moving average will begin to advance when we average this data in Monday. And perhaps, again, maybe we rally up to here and then start to pull back, and then that 5-day moving average has a chance to turn higher. But it's tough to trust. I need to repeat that over and over again, because just because we're getting a little bit of a bounce here, it's no longer a bounce with a dip. It's a bounce in a downtrend. The downtrend has the declining 20 and 50-day moving average, now a declining 200-day moving average in the next few days, and we're stuck below that year-to-date volume weighted average price. That's that blue line. I think that a maximum height of any bounce would be up to there, and that would certainly take me by surprise if we got up to the year-to-date volume weighted average price. The Russell 2000 continues to be the worst, but we saw some signs of stability in here today. It came very close to the 2020 low volume weighted average price. As you recall, we start our anchor there. We had handed it off to this point and then to here, and now you can see that just like we saw when this was broken, it acted as resistance. We'll see if this now acts as resistance on the downside, but we undercut that prior low and washed out below it looks like. So perhaps a little bit more of a bounce, still below the declining 5-day moving average, but the pattern is clear here, and that by that I mean these highs and these lows, lower highs and lower lows. That's the definition of a downtrend. Maximum height of this bounce, I think, market could prove me wrong, and that's fine. I'll trade what the market gives me, but I think would be up in this area if that year-to-date volume-weighted average price comes bearing down and we see, I find it hard to believe it could do something like this, but you never know. This market, all markets are going to surprise you at some point, and that's why risk management is our number one job, and that's why you can't expect to be part of every single rally that emerges. And when you get them wrong, ideally, hopefully, you cut your losses very quickly and are flexible enough to get back in when the market tells you that's the appropriate thing to do. Semiconductors, we know they've broken this bigger box up here 2 weeks ago, and from there they got slaughtered right down to this volume weighted average price. I don't know what the significance of that level is, truthfully, other than we've seen that it was this high rather, and then it has touched pretty close to there several times, and then again now we're still below the volume. We're right at the volume weighted average price from 2021. Severe downtrend. Big downtrends often get big bounces, but after they've cut everyone out of the market. So if you have fresh capital available, maybe it rallies up to this level, pulls back a little bit, and then we get a bounce next week in the semiconductors, perhaps up to the year-to-date volume-weighted average price. That's not the year-to-date volume-weighted average price. That's from that gap higher on the 12th. The year-to-date volume-weighted average price is way up here. So the one that we were just looking at, we're looking at a 65-minute time frame, is up here. I think that would be the maximum upside for next week if it does in fact continue to bounce. And as I just sketched in, I don't think it would just go straight up there. I think instead you would see something like this. It kind of gets back above that 5-day moving average, maybe a little shakeout, and then get going something along the lines of that. That would be much more realistic expectation. Biotech's finally getting a little bit of a bid here. They've been the worst group for a while. As we know, they broke that big band of support. It held as resistance for 3 or 4 days and then just got the shit kicked out of it. So over to the weekly time frame, I guess I'm ready for the weekend. We got to go back to 2016 and look for important volume weighted average price levels, and there's really nothing there. And so does that make the volume weighted average price useless? No, it just means there's no volume weighted average price level that's being defended. It doesn't mean that it can't bounce or that this isn't a real move. But this is the scenario I'd been outlining to subscribers this week, is that if we were to undercut this low, a lot of times what we see is you undercut the prior low, and that's what I was hoping we would see happen in the S&P and in the NASDAQ, is that we would undercut these lows similar to what the Biotech did, and then to bounce. They rallied up to the 5-day moving average, backed off, and then pushed through it later in the day. Again, that 5-day moving average is declining, but Monday morning, first thing, it will be advancing. So, the easy thing, the thing that most people I think are going to want Monday is for it to pull back like this, which means it's more likely to rally up like this and then pull back, and maybe even just get slightly above this level so people will get excited and think it's breaking out and then begin its pullback. Don't fall for that shit. Instead, have a plan. If it pulls back and then starts to rally again, buy it as it rallies back up with a tight stop so that you're alive for the next attempt if you don't get washed out with big losses. Financial stocks trying to stabilize near this 200-day moving average. They're still below the declining 20 and 50-day moving average. As we noted a couple weeks ago, it was the earnings that crushed it. This group ran up in front of the earnings reports. The earnings reports came out, and from that failed move higher came this fast move lower, trapped below the 20, the 50, and the year-to-date volume-weighted average price. So over here, we're still seeing that it's trying to stabilize, and kind of the same scenario. This is the potential resistance zone for this market. Maybe it rallies up, gets people excited, then pulls back. It has a nasty habit of doing that sort of thing. All of these markets do. Energy names continue to be strong. They're really not pulling back much. That shows a real strong market. It's still got a bid in there. Some names to keep an eye on next week. Real quick, I'll just point a few of them out. Arch Resources is, of course, an energy name trading up near highs. Kind of a tight range recently. I'm not going to give you any suggestion. Actually, I will. Maybe above here with a stop below there. Ideally, we want to see it do this, though. Tighten up and then get going. Beam, it still looks like garbage, but maybe it's healed a little bit here and ready to rally. CF is Consolidated Freight. That holds up nicely. Here's a weekly time frame. I go through charts like this, for subscribers every day. Bring them about 5 to 6 actionable ideas. Today we got stopped out of Airbnb. We got short this one yesterday at 143.50. We covered a third at 140. Today we covered another third at 136, and then we were stopped out of the balance at 139.90. On average, we made $4.38 on 2 days short, and that's the right thing. It's back to where we shorted it basically. That's swing trading. That's the time frame that we have to deal with in this market, and hope you did okay in the market this week, and have a good weekend.